Meeka Metals and their CEO and MD team, and also Golden Dragon Mining's the managing director Simon to join us to discuss about the current gold market and also the companies as well. So I probably gonna introduce myself first because it should be the first time or the second time that I host this thing. So I'm Sam from Richlink Capital. So I'm the director of asset management of Richlink Capital as well. So from the background, so in recent time, we can see that because of some of the geopolitical reasons and also some, I would say, still unstable of the global economics, the gold price has been raised a lot from the data we got in the past 1 year. The gold price has raised from 2,900 Australian dollar per ounces into 3,500 Australian dollar per ounces, which is around a 20% raise. Probably better than some of the even for some of the more risky investments. So that has actually bringing a lot of new opportunity into the both the community market and also the capital markets. Also bring the opportunity into those early exploration gold companies, nearly production companies, and also restarting gold companies. So from our perspective, we feel like it might be another round of gold rush in Australia or around the world, both on the community side, like physical gold side, and also the capital market side. So that's why we invited both the Meeka and also Golden Dragon to join this event to share some thoughts on that. So firstly, I will invite Tim from Meeka to share his thoughts on this. I probably give a brief introduce about Meeka and also Tim as well. So Meeka is a nearly production gold miner. So we'll predict from the announcement we can see that the production will start around next 6 months or 12 months. With the company will already have a resources of 1.2 million ounces, and the projects are located in Western Australia. And I will also give an introduction of Tim himself as well. So Tim is a qualified mining engineer with extensive operational and technical and management experience with both Australia and international. Tim negotiated a deal to acquire the company's 1.2 million ounces gold projects before accepting the role as managing director with mandate to expand the resources and bring the high-grade gold projects back into production. So now I will handle the talk to Tim to introduce Meeka.
Thank you, Sam, and thank you to Richlink and Tiger for the invitation to present and to tell Meeka's story. And the story is really focused on getting our high-grade gold project back into production. And that is what you can see on the slide there. That is our mine in Western Australia. And as Sam spoke to just then, we want to be producing gold in the first half of next year. That is the plan, and that is what the team is working on now. And we're really excited by the opportunity, given the very strong gold price and our view that the gold price has got significantly further to move and much higher to move. So it's a fantastic time to be in gold, and it's a fantastic operating space. The West Australian gold space, it's from a regulatory perspective, it's fantastic. It's easy to get projects permitted and built. We have excellent access to resources, lots of highly skilled, a very large, highly skilled mining workforce, access to equipment and resources to get things done very quickly. Our project is in Western Australia. It's 50 kilometres north of Meeka, and the intention for us is to bring this project back into production next year, early next year. We produce up to 64,000 ounces of gold a year, or mine up to 64,000 ounces of gold a year. The total mining is 400,000 ounces over 9 years, and it produces significant free cash, over $550 million of free cash flow, NPV of $340 million, and an internal rate of return of 127%. And that's a function of this very strong cash flow and the very modest amount of capital that we need to spend to bring this project back into production. So it's only $40 million, and we spend $40 million to get back into production, and then we generate over $550 million of free cash flow. So it's a fantastic project, and certainly a project that we're excited to build in this rising gold price environment. There's also significant opportunity to expand on this and grow the production profile, and I'll talk a little bit about that later in the presentation. From a corporate perspective, our capital structure, we closed yesterday at 3.8 cents, and that gives us a market cap of around $45 million. We've got $3.8 million in the bank at the end of last quarter, which gives us an enterprise value of around $43 million. And when you look at the enterprise value on a resource ounce basis, so we like to compare companies based on their value and the size of their resource. That's a good, effective way of comparing companies. We have an enterprise value per resource ounce of less than $40 an ounce, which is very low when you compare that to our peers. So we think we've got lots of room to move higher, and certainly in this rising gold price environment, we think it's a fantastic opportunity for investors to follow the company and see what we're trying to do and achieve over the next 12 months, bringing this project back into production. From a board and management perspective, we've got a very strong board, a board that is led by Paul Chapman, that has extensive experience in the gold space and in the resources space. He built Silver Lake Resources, which is now a over $1 billion market cap, produces 250,000 ounces of gold each year, and he's been involved in a number of other very successful gold mining companies. In addition to Paul Chapman, our chairman, we have Roger Steiner-Price and Paul Adams, both very experienced in the resources space. Roger is a lawyer. He's the chairman of the large Stein-Price-Paganin law firm, which is across Australia. And he's been involved in significant value accretive transactions in the gold space. He was involved in the discovery of the over 1 million ounce Rebecca deposit, which was taken over by Ramelius. And then Paul Adams is a geologist. He has very strong technical and market skills, and again was involved in significant value growth in the resources space. He was the managing director of Spectrum Metals, which was again taken over by Ramelius. So we have a board that is demonstrably, or has a track record of creating value and can deliver execution. And in addition to the board, we've built over the last 12 months a very strong operating team, from Tony Brazier, our CFO, who has previously worked with Ora Banda Mining and other resources companies, Pilbara Minerals, for example. Our Chief Development Officer, Chris Davidson, who's had experience both internationally and in Australia. Most recently was working for Silver Lake Resources and built their Rothsay mine in Western Australia. James Lawrence, our experienced geology manager, who's just come out of building King of the Hills mine for Red 5, and Alan Tandy, who is our environmental and permitting manager, he got the Bellevue mine permitted for Bellevue Gold. So we've got an experienced board, but also an experienced management team that can go and execute. which is very important. Now, from a project perspective, I mentioned we're in Western Australia. We have a 1.2 million ounce resource at a very high grade comparative to our peers. So 3 gram per tonne resource, that's very unusual for a resource grade. It's very high and it's very favourable. And an initial reserve of 305,000 ounces at 3.8 grams. It's, when we look at that grade, we, as a mining engineer, I get very excited. We can certainly make a lot of money out of those projects with that grade. So this is a great time to be developing a gold asset in a rising gold price environment with very strong grades like that. And then finally, we own those resources 100%. We don't joint venture, we don't share ownership. There's no one else. We own it 100%. So we have ultimate control and ownership over the project. And then in terms of speed to production, so 100% of our resources and reserves are located on mining leases. And what that means is it's very quick for us to go from planning to execution and go and build this mine. It's a granted mining lease. We're ready to go. It accelerates that timeline to production. And then the final point that I'll make is we've got extensive infrastructure on site and in the region. And what that means is it reduces the development time and it reduces the startup cost to get things started. And that's very important for us as well, as we want to spend as little as possible and then make as much return as possible. And that's certainly what the financials demonstrate. So these are the financial results. We released these this morning as part of our definitive feasibility study release. I mentioned before, we mine 400,000 ounces of gold. We process 3.4 million tonnes at 3.7 grams per tonne. Very good recoveries. We sell 390,000 ounces or recover 390,000 ounces over 9 years. And what that delivers in terms of the economics or the project economics is a free cash flow of just under $500 million at a conservative $3,250 per ounce. And if you use the spot price today of over $3,500 per ounce, it produces $577 million of free cash flow. We pay back the very modest startup capital requirements of $44 million in just 7 months. So almost just over half a year. And we've paid back all of the costs required to go and build and develop this project. So very appealing financial metrics and certainly a project that warrants being developed and will generate very strong returns in this gold price environment. Now, just talking about what that cash flow profile looks like. So I mentioned at today's spot price, it delivers $577 million of free cash flow. What you're actually looking at on the screen there, this is the cash flow profile at a lower gold price. This is at $3,250 per ounce. So if you use the spot price that we can sell the gold for today on the open market, it is significantly more than what you can see in that chart. But this is a very good outcome nonetheless. So we spend our $44 million in the next 12 months building this project, and that includes a contingency payment, a contingency amount to cover any unforeseen costs. And then we yield very strong free cash flow for the following 9 years. And that's an excellent outcome for this project and considering that very modest amount of initial expenditure. And then the final point I'll make is there's significant opportunity to grow from this. So this is a very conservative base case around the milling and the cost profile. And what we actually see is over this period, the grey slope at the back, or that grey area at the back, is the stockpile that we build. So the blue bars are what we mill, and the gold bars are the mine production. That's what we mine. And we end up building up a very big stockpile. And what we're investigating now is we're investigating opportunities to accelerate production, so increasing processing plant throughput, bring forward the processing of this stockpile, you can see in the background, increase the production throughput, increase the ounces that we produce each year. And what that does is it makes the cash flow significantly more it grows the cash flow significantly. The other opportunity that we have, if we increase the milling throughput, is we have the opportunity to bring in lots of additional open pit material, which we haven't considered as part of the definitive feasibility study because the mill was operating at full capacity. So now if we're looking at increasing the mill throughput, we can actually go and mine more open pits, bring more material into this ore reserve, increase the gold produced, increase the cash flow, and make this project even more appealing from a cash flow perspective, more profitable than the already very favourable outcome that this DFS, this definitive feasibility study delivers. Now, why is it such a low startup cost, a very modest startup cost? Well, that's because we have significant infrastructure already in place on site. What you can see on the slide there is our processing infrastructure. This is on site. It's ready to go. We have to spend a very modest amount of money to go and restart processing. We have a powerhouse on site. We have the workshops and stores on site. And this is why it's a very low startup cost and a very quick startup period for us, because we have significant infrastructure on site ready to go. Really, the only thing that we are going in and or the only large change that we are going in and making to the processing plant is we're adding additional tanks, which means that we have the opportunity to increase the size of the ball mill and increase production. So I mentioned before, we built a very big stockpile and we'd limited the amount of open pit mining because the mill was full. We're putting the tanks in. We've included the cost to put the additional tanks in to increase the residence time. And now we're looking at increasing the size of the mill, and that grows that production above, it gets us closer to that 80,000 ounce annualized production with that 750 kilowatt mill. So that's something we're looking at now. The production profile in the definitive feasibility study that we've released on the market, it doesn't include that higher throughput assumption. It includes a very low conservative throughput assumption, but we're now looking at putting in that larger mill and increasing the production. So there's lots of upside to this base case production plan that we've put forward, and certainly we feel this is very easily executable given the significant amount of infrastructure remaining on site. In terms of the site layout, what you can see there is the mill and underground mining will be at Andy Well. This is the existing infrastructure here and the mine, and then 20 kilometres along this haul road to our open pit mining area at Turnberry and St. Anne's. Now these open pits have never been mined. They're completely virgin, so they're low cost, oxide, very high grade. There'll be very low cost mining, and very low cost milling because of the oxide nature of that ore. And the initial open pits are grading between 2.5 and 3 grams, so very high grade for open pit material. And that gives us that immediate strong cash flow, which is very important when we get started to allow us to go and pay back the debt facility that we'll put in place to build this asset. And then just a little bit of detail on the open pit mining itself. So what you're looking at here is a long section through our Turnberry open pit and a cross section through that same deposit. So very wide zones of mineralization. The mineralization is up to 20 to 25 meters wide, very high grade. And the focus for the last 12 months is, you can see these blue dots on the slide there. That is the focus for our drilling over the last 12 months. It was infill drilling to increase the confidence of that mineralization and bring that into reserve, and that's what we've done. The Turnberry deposit is very, in the oxide open pits, is very high grade. There's a lot of metal there. It averages 1,600 ounces per vertical meter. And then the St. Anne's deposit to the south, again, is very high grade, 3.1 grams per tonne. Neither have had any mining. It'll be cheap mining, oxide, and will deliver very strong cash flow for the business. And as I mentioned, there's opportunity to put the larger mill in, which increases production, and then we can go and expand on those open pits and make them bigger, more gold into the mill, higher production profile, and a very good outcome from both the production and cash flow perspective for the business. Now, from an underground mining perspective, what you're looking at there is a long section through our Andy Well mine. We are going into mining completely virgin parts of the ore body. And if you look at some of those drill results on the slide there, very, very high grade gold. And the other point that I'll make is all of that gold, all of those lodes that we're going to go and mine, or we plan to go and mine, remain open. So when we go back and start mining, we will be drilling underneath this mineralization and looking to extend that mineralization, grow the resource, grow the production plan, increase the mine life. And we feel we're very confident that we'll be able to do that once we get back into this mine and start doing work. It also benefits from significant infrastructure already in place. And why that's important is it reduces our cost and the time to get into production. So it accelerates that initial production plan, which is also very important from a cash flow perspective. Finally, what I'll touch on from a mining perspective is the costs. So if you look at our production and cost profile here, the red line is our cost profile each year, and that is our all-in cost. So it doesn't hide any of the costs. It captures absolutely everything that we expend, all of our expenditures. So we, initially in the first few years, there's a lot of investment in building the mine, and then it as we yield and produce, the investment reduces, and we yield cash flow from the project, and the costs reduce. So this is a very favorable cost profile. When you look at the gold spot price, $3,500 an ounce at the moment, slightly higher than that actually. And it's going to cost us about $2,000 all in to produce these per ounce to produce the gold. So very favorable economics. And then finally, from a growth perspective, once we get into cash flow, start producing gold, and go and continue exploration outside of these mines, we feel there's a very strong opportunity to significantly grow the resource, and that's going to be a key focus for the team once they build the mine and get the mine up and running and into cash flow. So I'll leave you with three key points. One is that we're in the next 12 months we're going to be building this mine and producing gold. The second point is the mines that produce that we're going to produce the gold from have significant opportunity to grow, and we have opportunity to grow that production profile, and start heading towards 80,000 ounces per annum. And then thirdly, there's significant opportunity to go and build on this with exploration success outside of those mines. And we're very excited to get started, and we'll be focused on this for the next 12 months, producing gold. So thank you.
All right, Tim. Thanks for the sharing. I think we actually got a lot of questions regarding to MEK. So let's go for this one by one. So the first question coming from the audience is, as we as we discussed on the private talking about gold price. So they want to have some brief thoughts about the trend of the gold price right now.
Yeah, internally, our view is we have seen a very strong appreciation in the gold price. But if you look at the fragility of the financial system globally, there is a significant amount of debt, both public and private, so governments and private debt. And in most first world or most economies around the world, I should say, particularly the US, you've got debt to GDP ratios which are over 100%, and a lot of liabilities around social security and healthcare, which the government does not generate enough tax revenue to cover those costs. So there's significant concern globally around those issues. And if you look historically at how governments have rectified that debt to GDP ratio or reduced the real value of that debt, it's through inflation. So it's through stimulating the economy, money printing, degrading the value of their currencies, and eroding the real value of that debt. And I think that is what governments are doing now. They're artificially, while interest rates have risen, they're still they still seem to be quite low relative to the inflation that we're seeing, and that's what erodes the value of currencies. I think that will be an ongoing thematic over the coming years, and certainly has been over the preceding 2 to 3 years. So what performs well in that sort of environment? Well, it's real assets, it's real estate, it's commodities, it's gold. Gold is a very strong performer in that sort of environment, and I think institutional investors are starting to realize that now. They're
Yeah.
starting to move money into the gold space. But when you look at the value of gold mining businesses relative to other exchanges in the US, it hasn't moved significantly. So there's still time for investors to get in before this gold market really kicks in, and that's something we internally firmly believe gold price has got a very strong tailwind.
Yeah, understand. And also, one of the other question is, what would you think some of the milestone events for MEK to bring up the market cap, like the market value as well? Yeah.
Yeah, so we will be putting out some announcements in the next 2 to 4 weeks around project development work. So in June, project development work, we're going to be installing a camp. We're starting to purchase the items that we need to restart the mill. So that will happen in the next 2 to 4 weeks, and also permitting. So we've submitted all of the applications, the final applications for open pit mining in December of last year. We're expecting those permits back in June. That will
Yeah.
be some news flow around that. In July, we'll announce the funding, so that we're putting in place debt funding, secured debt funding to build this project. So when you look at the cash required to build it, I mentioned we need $44 million to build it. That includes a contingency. That's going to be funded through debt. With that debt process is well advanced, we will have credit approval, we feel, by the middle of July. So there'll be news flow around that. And then that's when construction activities and mining really start to ramp up. So permitting and project development work start in June, funding in July, and then from there we'll have continuous news flow around activities that are starting and progressing on site. And we feel very strongly that by the middle of next year we'll be producing gold bars and producing cash flow. So it's a very exciting time when you look at the value of the business, the enterprise value of the business, or the market cap of the business. We'll be producing free cash flow of $50 to $70 million. If you use today's spot gold price, $70 million of free cash flow in that first year. That's nearly 2 times our current market cap. So we feel that the share price is going to move very strongly once people start to see this project getting built and see the truth in that we're going to be producing gold in the next 12 months. And certainly with the gold tailwind, we expect the gold price to be a lot higher once, by mid next year. If you look at the forward price of gold, it's priced around $3,900 an ounce in mid next year. So it's a very strong price environment, and this project produces very strong cash flow. What that means is this share price is probably going to go a lot higher than where it is today.
Yeah, exactly. And also another question is, can you actually have some sort of explanation regarding to the production efficiency and also the cost control of the company, and also what sort of level is in Australian market, like compared to other gold miners?
Okay, in terms of the cost per ounce to produce,
Yeah,
so
exactly.
all-in cost of around $2,000 per ounce is very similar to a lot of our mid-tier gold producer peers that produce between $2,000 and $2,200 per ounce all-in cost. There is the big companies, the Northern Stars, the Barricks, the Newmonts. They produce in that $1,200 to $1,500 an ounce price range. We're above that, so we're a slightly higher cost. given our smaller production profile than the majors, but we feel we'll compare favorably to our peer group, which are producing 100 to 300,000 ounces of gold per year.
Yeah, understand. And also one other question is, cause as we know, we already got pretty mature projects, got the resources and prepared to production. And also we also got some other tenements early stages. And also we got tenements around that mature areas. So what's your thoughts on that? And the audience would like to know if there's any other sort of potentials for those tenements as well.
Yeah, that's absolutely our view is there is big potential there. It is a greenstone belt which has had very little systematic exploration and drilling outside of those resources. The key focus for the business has been pushing this project into production because that gives us the cash flow to then go and do this exploration and deliver that growth without diluting our shareholders down. So we wanted to generate cash flow and use that cash flow for discovery so that we weren't impacting our shareholders and relying on our shareholders for equity funds. That is, equity is the most expensive form of capital, and we wanted to minimize that. So the next 12 months, we'll do a modest amount of exploration drilling and growth drilling, but really the focus will be getting to the point where we're producing gold and in cash flow, and then we can accelerate that growth. But the other thing that I would mention is there's opportunity outside of our tenements for growth as well. So there's a number of things that that potentially flow into the window of view, if you like, once you get this project into production, into cash flow, and build the value of the business up as well.
Yeah, exactly. That's right. Okay. That for question actually is like I summary all the bunch of questions together. So that's pretty much answered all the questions. Yeah. So thank you very much, Tim, for joining us and to share the story. Yeah.
Thank you, Sam, and thank you to Richlink and to Tiger as well for the invitation.
Yeah. Hope MEK perform extremely well in the future. Cool.
Thank you.
All right. Thanks, Tim. Cheers.
Cheers.
Okay. Now let's introduce Golden Dragon Mining's. Simon, if you want to share the screen. Cool. Probably I introduce Golden Dragon Mining's for the background and also Simon's background as well. So Golden Dragon is an exploration company with 4 key projects area within Western Australia. The portfolio of the project are prospective for gold, nickel, copper, and lithium. Golden Dragon intends to list on ASX later in the year, and once listed, intend to create shareholder value by exploring this project's area and also to unlock the tier 1 potential of the assets. And also I will introduce Simon as well. So Simon is a geologist with over 15 years of mining and exploration experience, predominantly in Western Australia. He has experience in project evaluation, resource estimation, open pit mining across multiple community, including gold, nickel, and copper. He has held key management position in ASX listed mining exploration companies, KIN and also GSN. And for Golden Dragon, I have to disclose that I'm actually a director of the company as well. So I will be pretty objective. And Simon, you can start your presentation. And I think we couldn't see your screen yet.
Oh, you can't see my screen?
Yeah.
Oh, hang on. There's that one.
Yeah. Yeah, it's sharing. Yeah. Work now.
Okay.
Okay. Simon, you can start. All good.
Okay. Beautiful.
If you want to go into full screen.
Is that okay there? Can you see
Yeah.
that?
Yeah, all good now.
Okay. All right. Thanks very much, guys. So is that going to move? Oh, sorry, I was having problems moving the. So, is that working? Oh, sorry about that.
Yeah, it's
Okay.
working.
It's the
All good.
screen now. Okay, so thanks very much, guys, for listening in. So project highlights, I guess the biggest project highlight would be we've just acquired this fantastic Q project. Q's renowned for its gold. It's in the Murchison there. And it's a long strike from the Big Bell the Big Bell, West Gold's Big Bell mine. So they're mining currently there, and they've got a 10-year mine life on that. And there's 2.3 million ounces of gold there. So we think we've just picked up a fantastic project. And we've also got other projects, some lithium and some critical minerals that I'll brush on later on. But the darling of our portfolio would have to be this Q project that we just recently acquired, and it's very exciting times for us. So where are we in the in our company progress? Unlike Tim there, we're just starting off. So we're in the IPO phase. We just pretty much just acquired, like I said, the Q project. So we've got all of our projects now that we're happy to list on. And we're currently in the pre-IPO capital raising phase, which we're nearing completing, and then we'll just be lodging our paperwork to the ASX and getting on the ASX hopefully by September, all things going well. So there's the board. We've got quite an experienced board there. Rod, who brings a wealth of experience. He's a geologist as well as myself. So we've got two geologists there, but Rod's got some really good marketing and acquisition there. And then as Sam mentioned earlier, Sam's much more on the corporate side of the business side of things, and also Frank there. And as you can see, Frank and Sam are both on some ASX listed companies there on the boards there as well. So I think we've got a really good mix of different skill sets that will push this company forward. So where are we and what projects? So we've got 5 projects, and like I said, all in WA and predominantly gold focused. But like I said earlier, we do have Spinifex and Holland, which are some lithium projects. But we've got Q, Stellar Range, and Narndine Queensland as well. So this presentation will mainly focus on the Q and Stellar Range. So gold, you heard Tim sort of speculate about gold and where it is and what's been happening. So this is just a 5-year graph of what gold's been doing in US terms, US dollar terms. And you can sort of see that there's just been this stable period in US dollar terms. I must admit, when you convert that to Australian, the last few years it has gone up. But there has been this stable period where it's just been oscillating for quite some time, and then it's only just recently, sort of at the end of last year, where you could argue that there could be a breakout. And it's 2,400 US, so it's the highest it's ever been. So really quite interesting times for gold. Where will it go? There's lots of speculation on that, but it does look like we are moving out of that oscillating period and maybe into sort of a breakout period, and where that will stop is speculative at that. But it's a good time basically to be in the gold space, in my opinion. So we'll just go into the Q project now. So the Q project is in the Murchison, and it's just a safe tier 1 jurisdiction, and then tier 1 asset, and it's just a great place to be exploring for gold. There's 35 million ounces of gold being found in this jurisdiction, and as you can see there, great infrastructure, We've got hollow just going straight through our tenements, and also as far as neighbours and plants and everything like that. Westgold are our neighbour, and lots of opportunities there. If we do find a sizable resource, we might be doing some toll treating or something like that. So there's options aplenty, and it's a very safe jurisdiction. So why do I like Kew so much? I guess it's just got some amazing drill ready targets. So the previous exploration there, that's got all the max AU gold. And as you can see, you've sort of got multiple areas where gold has been found. You've got Jeffreys Well right up the north there, Stockyard east and west, and Berang, and then the Big Bell shear zone trucks all the way through up there. And then we've got Big Bell, what we refer to as Big Bell North, as an exploration target also. And these are great, quite high grade intersections. 8 at 5 is very mineable and very exciting. And then Birrambor is also sort of got a much more wider lot of mineralisation with a high grade core, and then Jeffreys Well as well. So lots of drill ready targets. So it's not greenfields. There's been some work there, and the work is very promising. So the next slide we'll drill down into one of these areas. This is known as Stockyard East, and we've got already defined 1.2 kilometres of strike and 300 metre wide zone of mineralisation. And I pulled this section out here. It was predominantly RAB, so we were getting that supergene enrichment there. But then there are 1 or 2 RC holes that have been put into it, and you can see 8 metres at 5.8 is a fantastic intersection that has had no follow-up drilling on it. So that's for us, that's very exciting, and there's great potential there to define a maiden resource on that. In my opinion, it's just a matter of spending the time and the money exploring. So it's a walk-up drill target, and very exciting. Another area which I touched on was Birrambor. So again, you've got this zone of mineralisation there where it's been defined in just shallow air core and RAB, but already it's a 900 metre by 500 metre zone of mineralisation. There's a little exide tenement there, and then there's another lode there that they've drilled out. So we plan to just sort of really try and link these two together and understand what's going on there. But these wide intersections are very encouraging in the fact that it's very amenable to sort of open pit mining. You're not just getting the one high grade hit here and there. You're actually getting these wide intersections which are very favourable for open pit mining. So very exciting prospect and again, drill ready to go. We just need to do some quite extensive infill and extensional drilling on that, and you just don't know what you're going to be able to establish. And then the next one I would like to just touch on is Big Bell North. So Big Bell North is, like I touched on before, is Westgold's Big Bell is there. There's 2.3 million ounces there. And then also they've already mined multiple, I think it's about 3 million ounces that they've mined. So very exciting to see that if you trace that shear zone up there, then it goes right into our tenure. It should be said that there's multiple shear zones that come up through there, but this Big Bell shear zone is very exciting and well worth exploring. And so much so that Evolution did spend a little bit of time there a few years ago and demonstrated that the shear zone has been intersected. They're hitting the right rocks, and not only that, they're getting gold and the alteration in there as well. So you're getting arsenic, antimony, and tungsten. All the key pathfinder elements that you find at Big Bell, you're finding those same pathfinder elements on Golden Dragon's tenure. So again, very, very exciting. So they drilled 3 diamond holes on that shear zone there, and all of them got mineralisation. The best was 3 at 2.28. So quite, not mineable at that point in time, but it has demonstrated that the shear zone is present. There's gold in that shear zone, and it in my view, warrants further exploration. So very exciting. And they only just recently had this high-res gravity on this other over here, and you can still see these shear zones might be bifurcating. So, and that comes into bearing there. So very interesting in the fact that there's just no deep drilling really at all along this shear zone through here, and also the Big Bell shear zone. The up through here, there's very limited. They did some shallow air core, but no deep drilling there either. So what it demonstrates is there's huge upside there to establish where where the Big Bell shear zone continues on, and then within that shear zone there'll be a trap of some sort, and we just need to identify that, and then that's where all the gold will hopefully be residing. So so it's very, very exciting times, and Evolution did some good groundwork, and we just need to follow up on that. So yeah, very, very exciting. So that's queued. Now we'll move on to Stellar Range. Stellar Range is one tenure, it's about 130 square k's. It's further to the east on another Archean greenstone belt, which we'll just click onto the next slide. So it's on the Laverton belt, right on the southern tip of the Laverton belt there. So we sit right there. So Laverton's, again, another prolific greenstone belt. 40 million ounces has been discovered on that greenstone belt. But this is a very southern portion of it, and it has been very much overlooked. It has not been at all effectively explored for gold, and it is an early stage mover, we believe, in the fact that very little exploration for gold has taken place. The only exploration that has been taken place is St. George, and with a JV with BHP in about 2014, but they were nickel focused. So what they were exploring was this ultramafic belt through here, this ultramafic unit, but very little assaying for gold was taking place. So we believe that there is some nickel potential there still, but our primary focus will be the gold. Now, what's interesting there is, as you can see by that image, Gold Road have just pegged a huge or acquired a huge tenement holding directly south to us, which reaffirms what we were thinking, the fact that we think this is a very, very good place to explore for gold, and it's sort of reconfirmed it by Gold Road pegging that huge amount of real estate there. So it's an interesting time. So and Gold Road, it might assist us in the fact that Gold Road might start exploring for gold there, and it might give us some indications of the best place to explore, and also give us some upside as well. So what has been done there in the ways of gold? Not much, but it has demonstrated that there is gold in this shear zone. So I can't stress enough that these drill holes were targeting nickel, but they did assay for gold. So they're not drilling the main shear zone, but when they did get some gold, 7 at half a gram, including 1 at 1.73. So it's demonstrating that this shear zone is live, and it's got gold running through it, and we just need to follow that up and explore further. But I'll just touch on the nickel there. So that over there in that image there is some historic RAB drilling. The RAB is quite shallow. It doesn't go that deep at all, but it does demonstrate that there's 0.5% nickel intersections there. And interestingly, it's on a totally different ultramafic unit. You can see these purple units running through there. And then the one that St. George was targeting runs further to the east there. And there's their drilling there. They didn't really intersect much nickel at all, but they did do EM on that ground. And you can see the EM targets weren't effectively tested, in my opinion, either. So there's scope to drill for nickel on this ultramafic unit here, and also follow up on those EM targets as well. So there's a bit of nickel opportunity, nickel cobalt opportunity there also. So that's the two gold projects and move on to Holland and Spivifex. I'll talk to them collectively because they're both very early stage, but I'll go to the next slide here, and that sort of highlights where they are in the lithium belt. So we have Holland down here to the south, and then over here we've got Spinifex tenure. And the big take home here is Mount Holland, which is Wesfarmers mega deposit, 190 sort of million tonnes of lithium there, and we're a mere 15 k's away from that. And then Lake Perseus is also another up and coming deposit there, and we're 5 kilometres away from that. So what has been done, literally not much at all, in the fact that it was just overlooked because it's lithium has only become sort of more favourable later on. So we'll just go through the normal process of doing those grassroots exploration on this tenure, some auger drilling, and just assay for rare earths and lithium and see how they progress. So they're quite exciting in the fact that just such little work has been done. We have generated some targets through hyperspectral, and we'll use that as a guideline there as well. So very interesting in the fact that there's just been such little work done. So and it'll be low cost exploration to generate some targets hopefully. So then the last one is the Nardine fence line. Again, this one's quite interesting in the fact that we've got some copper, lead, zinc opportunities there. That just over to the west there, you can see this massive LAD complex. It's one of the biggest LAD complexes in Australia, so it's very interesting geologically in that sense. These LAD complexes are quite often favourable for PGEs and nickel copper. So we think we've got some PGE nickel targets on our tenure there that have had very little exploration, and you can see the magnetic high there, which suggests it's an ultramafic unit, and whether or not that's on a basal contact there is debatable, but it's a very good exploration target there. And then also we've got sort of some SEDEX targets up here for copper, lead, zinc. So again, early stages, but exciting times in the fact that we can just do that grassroots exploration and hopefully generate some compelling targets from there. So I think that's about it for the projects, and then that's just our pre-IPO structure. It's where we're at the moment, and then next slide sort of goes. Whoops, sorry. The next slide there is just how much we're planning to raise and where we'll be sitting once we've raised that after the completion of the IPO. And that's about all I have. So thanks very much for listening, and there you go.
All right. Thanks, Simon, for sharing all of this. Yeah.
No worries.
And probably there's some questions coming from the audience. Yep. So the first one would be because we didn't mention too much about the market cap. So what sort of market cap are we looking at for now? Like probably not for pre-IPO round, probably for IPO round. So what will be the after raising market cap? Yeah.
After raising market cap, so we're planning to raise 5 million, I think, from memory. So yeah, it would be sitting at that. It depends on obviously the amount we raise, but yeah, that's sort of our market cap that we would.
Yeah, so would it be? I think from the table would it be 3 million at that raising 5 million would be around 8 million, about that number.
Yeah.
Okay, cool. And also, audience are asking when the company doing the acquisitions for the tournaments, will there be any sort of debt, or would it be all coming from giving them shares or cash?
Yeah, so it must be stated that the Q project, we're planning to acquire 80% of that, and then and that would be part part shares and part cash, and that's in the final stages of negotiations. And then all the other projects have been acquired. So, and there is again a share component and a cash component of that, but it's all subject to listing as well. Yeah.
Yeah, understand. So after the listing, we'll release the cash and shares. Yeah.
Exactly. Yeah.
Okay.
Yeah.
Understand.
The Q project, that the vendor will be free carried. His 20% will be free carried until point of a bankable feasibility study, and then that will engage another option there. Yeah.
Yeah, understand. Okay. And also, the other question is, what will be some of the growth target for this year and next year? So some of the milestone the company is looking at.
Yeah. So obviously, with gold where it is, and even without gold, without this last run, even at sort of 2,500. It's still just a great time to sort of try and define gold resources, and we just think we've just got such a great head start with the Q project there, that it really does seem to be sort of like a two-pronged attack there. I think there's real possibility of defining resources, open pit resources at say Stockyard and Beeron, and then how big they will get, I don't know, but you just need to put the work into those, and then that can sort of start building up a reserve, a resource base, and ultimately a reserve. And then, but then you've also got the big bell shear zone that needs to be explored, and that's where you could find another big bell. So they're million-ounce deposits there. So that's the secondary exciting component. So that's where we'd focus a lot of our exploration, would be the Q project, no doubt. But then also Stellar Range needs work to see if we can define a resource down there. And then also obviously, like I think low cost exploration on those lithium plays, and potentially rare earth there as well. It's worth just pushing along as well in the background, and see what comes out of those sort of second tier projects, but it's low cost. So that would be our exploration spend in the
understand. Yeah. So probably one last question. Let's see. Who's target? Oh, yeah. So any expectation from those tournaments we have right now, like say in gold or any other materials?
Yeah, like I think Q already demonstrates that there's already
probably I add the other thing is some of any comments on that, and also what will be some of the challenge for the companies right now?
Obviously, I guess where previous explorers on Q have failed is the cover. So I think it's pretty fair to say that Western Australia is reasonably explored. It's hard to find a greenstone belt that hasn't had exploration on it. But we think we've found some greenstone belts that have had limited exploration. So what's hampered that is the cover. So there is a veneer of cover varying in thickness over a large portion of that tenement. But we've recently acquired, and only just recently, I mean 2021 was when these magnetics and gravity surveys high resolution surveys have been commissioned by Evolution. So what that does, it opens up a new search space that previous explorers didn't have that information. So it's its worst enemy, but it's also its gift in the fact that cover is potentially hiding big deposits. And now we believe we've got a few tools in our kit to open those up and hopefully explore more efficiently.
Yeah, understand exactly. Okay, no problem. I guess thank you very much, Simon, for introduce Golden Dragon to everyone, and
Yeah.
hope
Yeah,
the
it's exciting
company.
times. I'm really
Yeah.
excited with the Q project. It's very rare in today's gold space to have such a huge 600 square kilometers of greenstone belt. So yeah, really looking forward to exploring it. Yeah.
Yeah, and also good luck to the company as well to
Yeah,
have
thanks. Indeed.
great results. Okay, I guess that's pretty much we can come to the end for the event today. Yeah. All right. Thanks again, Simon. All good.
Thank you.
And
Thanks.
thanks everyone to having this. All good. Cheers.
Cheers.
All
Bye.
right. Bye.